Hello and welcome to this Monday's weekly market briefing. We've got lots to talk about, but firstly, Kamala Harris is more trusted than Donald Trump on the US economy, as well as that multinationals sound alarm over weak demand in China, and finally, Iranians ramp up cyber attacks linked to US election, warns Microsoft. We've got lots to talk about on the charts. Also, with lots happening on the economic calendar, but we'll come to that near the end, so make sure you stay around so you can see that. Before we get straight into it though, make sure to subscribe. But the first article to talk about is to do with Kamala Harris and the US economy. Now, polls now show that America trusts Kamala Harris to handle the US economy, more than they trust Trump and his administration to do the same. This marks a significant and drastic switch in the voter sentiment regarding the US economy following Joe Biden choosing to withdraw from the 2024 presidential election race. Now, this is of course a massive change to the kind of election cycle, or the kind of period leading up to the election, as of course we've been covering this topic since the invisible primaries and even before that really. And throughout the kind of period so far, we've seen a massive amount, a great amount of things happening, with of course the massive decision by Biden to withdraw from the presidential race, as obviously Biden was very adamant about going into the kind of presidential nomination. He did, of course, he did have the kind of delegates to go ahead and become the Democratic presidential nominee. However, of course, now we know that Biden has dropped out. Now, this came among, kind of amidst a great deal of pressure from the Democratic Party itself, but also the wider public. So the wider public had ultimately fallen out of favour with Biden, and this really came as a result of kind of numerous appearances by Biden, showing that he kind of just did not have the kind of mental ability that he used to, and the kind of speeches weren't there, and his ability to kind of think quickly on his feet or even understand what's going on just kind of wasn't there. His coordination was lacking as well, just kind of all the signs of an elderly person, and that was also evident, of course, in his age. Donald Trump is, of course, a very old person in comparison to some other presidents and prime ministers around the world, but still not on the same level as Biden. And so many were kind of worried about that, and therefore the pressure was really against him to withdraw. And coming on to the topic of the US economy, well, ultimately Biden was very much not leading in the polls when it came to the US economy, and most voters by far felt that they were kind of worse off economic wise, financial wise, since Biden came to power. So that was a massive issue for Biden, which despite certain economic figures, but despite certain economic data, he couldn't kind of turn the kind of tides to support him in his bid for the presidential election. And ultimately, voters just did not trust him anymore with the US economy. We'll come to the exact figures in just a second, but ultimately, Trump was beating him when it came to the US economy and what polls were saying. Ultimately, though, what this article does now state is that Kamala Harris, despite what Donald Trump has expected of her regarding the polls and that kind of thing, and what I think lots of people felt when Kamala Harris was rumored to step up in kind of taking Biden's place. Many initially had believed that Kamala Harris would not kind of gain a massive amount of support as she takes over the kind of reins from Biden. But ultimately, it seems like when it comes to the US economy, she certainly has. And even when we look at certain other polls, which are excluding the US economy, just purely based on where US voters might vote, ultimately Kamala Harris is now causing the Democratic Party to lead in some of those key swing states, which of course is the very important thing, which both Trump and Kamala Harris, will be fighting over to kind of achieve, as that's really what wins elections. But ultimately, as we know, the US economy, what voters are thinking of the economy is more specifically what actually wins votes. And ultimately, that's then what wins those swing states. And that's possibly why, the fact that, Kamala Harris is now more trusted on the US economy than Donald Trump, that is possibly why Kamala Harris is now leading in some of those key swing states, with the survey conducted by the FT being the first poll to show the Democratic candidate to be leading against Trump when regarding the economy in a year. The actual percentages for the poll was that 42% of voters trust Kamala more to handle the economy in comparison to a lesser 41% for Trump. It's important to note, however, that Trump's figures have not changed from the same poll taken a month earlier. However, Kamala's numbers have gone up 7%. So that's the kind of key thing to note there, is that, there's been no change for Trump regarding, how much people trust him with the US economy. But for Kamala Harris, people trust her far more than Biden when it comes to the US economy. Now, we can all speculate to why that might be. Some could say that ultimately, when people are looking at the bad situation with the US economy that it's in, with the situation of the US economy at the moment, they're looking at Biden and not Kamala. And that's despite Kamala being the VP. As some, possibly the more politically literate, would argue that Kamala Harris shouldn't really have a more favourable, US economy conditions rating in the polls than Biden, because she was ultimately the VP during Biden's reign, and therefore, arguably she's just as accountable, or very nearly just as accountable as Biden when it comes to the kind of economic reports and that kind of thing. As her in that job, it isn't just a kind of, it isn't just a role which is ceremonial. That is a role which requires a great deal of work, and therefore one must question how she's not potentially liable for what's been going on with the US economy over the past 4 years. So some could ask that, but seemingly US voters aren't asking that, and they're looking at Kamala Harris as simply a change from the status quo, and therefore they're kind of looking at Kamala Harris as this new option representing the Democrats, which could in fact do well with the US economy, or do better than kind of how Biden's done so far, which many people are very, very upset with. This 7% jump represents the different perspectives held on the economy by Democrat voters when comparing both Biden and Kamala. Since Biden had struggled to convince the US public that his economic policies were benefiting them despite some impressive economic achievements, this seemingly played a large part in his withdrawal from the US presidential election. US citizens will still find inflation, US citizens still find inflation to be their biggest concern as they head into the election period, with only 19% of voters saying that they are better off now that Biden had taken office in 2021. So that's the kind of key thing that I was noting there when talking about the kind of economic record of Biden and arguably Kamala Harris, and how that's of course affecting polls, especially for Biden, but not for Kamala Harris, which is quite interesting. But that's all to talk about on this article. Next article to talk about is more so to do with multinationals and the topic of China and their economic conditions at the moment. Now, key multinational groups like Volkswagen and L'Oreal have stated that demand is becoming a greater issue in China. This comes as both a slowing economy and intensifying domestic competition begins to kill the appetite for foreign brands, and thus adds to the weakening global demand at the moment. As ultimately, the topic of the Chinese economy as in something that we always come back to, that we're always talking about, but really we can't talk about obviously in every economic briefing, because it's kind of when a new piece of data or new statements made by a key multinational group like we're talking about today. But ultimately the kind of key summary for China at the moment is China was dramatically affected by the COVID lockdowns. Of course, their zero COVID policy as a result shut down the economy far more than we saw in maybe other Western nations, and as a result had a monumental impact on those supply chains, which are still affecting the world today. And ultimately the change in kind of consumer behavior and supply side economics has ultimately changed, created a very different economic world for China. And at the same time, we're seeing a massive property slowdown. We're kind of seeing a property crisis take place, which of course, takes place over a great period of time. Property crises are not one of those kind of crises with regards to the economy, which maybe only last for 6 months. These things can last for multiple years, and that's certainly what we're seeing play out in China. as kind of the weakening property world, the weakening property sector has weighed on demand, especially consumer demand, especially as that's kind of main investment vehicle for Chinese citizens. And as we know from the wealth effect, ultimately when you're not doing so well with your real estate investments, or just the properties that you own, then you're not going to be as inclined to spend more money. And that's kind of why we're seeing such a weak consumer demand, it seems. But at the same time, we're seeing this kind of intensifying domestic kind of supply, especially for things like in the automobile industry, of course, which we've spoken about before with regards to Tesla and other key car manufacturers. Now, L'Oreal, for example, who sells luxury and mass-marketed beauty products in China, has now estimated that their sales growth in China has fallen by nearly 2 to 3% in the first half of this year so far. Volkswagen has also said that Chinese sales in the 6 months to June has dropped by a third on the previous year. The Chinese property crisis has created unfavorable economic conditions for consumers, and thus consumer-faced brands have suffered, with house prices falling further recently. In certain sectors like cars, there's also been a massive increase in domestic competition. That's what we spoke about with Tesla recently, which has caused them to kind of change their kind of business strategy, which is very interesting, of course. That's all talk about in this article. Last article to talk about is more so to do with the geopolitical side with regards to Iran, where, of course, we're always talking about potential regional war with Israel. But this time we're talking about the US election. Now, Microsoft has now stated that the Iranian state and their proxy actors have attempted to access the most senior US political leaders' email accounts. This comes as the Iranian state has also reportedly launched covert news sites which aimed at American readers in an effort to increase disinformation for the election. As well as that, cyber attacks are now increasingly feared, with a group run by the IRGC in June sending a personalized hacking attempt to a high-ranking official of a presidential campaign, that of course being expected to be Donald J. Trump. The same group reportedly tried to log into the email account of Donald J. Trump, however, but at the same time did fail. Meanwhile, a different Iranian group has been launching covert news sites in an effort to target US voters on both ends of the political spectrum in the lead up to the US presidential election. These sites have been using AI to plagiarize the content from the US outlets whilst hiding the original sources of the information. So very interesting kind of actions there taking place by, of course, a geopolitical enemy of the US and the Western world. And it's interesting to see how this is coming at the time of the US election, of course, and also a potential war in the Middle East. So lots to think about there. And thinking about the recent IT outage and the effects on the markets there. That's why I kind of chose this article to kind of talk about, because of course if we're talking about cyber attacks, we're going back to a similar situation as what we've already seen with the IT outage recently to do with Cloudflare and that kind of thing. But that's all to talk about on this article, and the articles as a whole. Next to talk about, like always, is the charts, where some interesting things are playing out to start off the week. Now, to begin with, we are still kind of on those lower levels for key US indices, as of course, not too long ago, the key US indices did sell off in quite a significant fashion as a result of, key economic data, IT outage, and a few different things at the same time, which caused, these key US indices to sell off. Now, ultimately, the Dow Jones, which we always talk about, the thing we always start with on this channel, is of course very much to the downside, as I've already said, but is interestingly sitting at this kind of key resistance and liquidity zone that we've noted out before. Now, this level is not kind of one of those all-time high levels, which is now acting as a key area of resistance, but instead it was a kind of key area of distribution and accumulation previously, but has only acted before as a key area of resistance, only once as an area of support, and is now seemingly acting as another area of resistance once again around that 39,600 level. So price has recently spiked into that area of liquidity, has wicked into that area of liquidity, ending off last Friday. But to start off the week, we are holding below that key liquidity zone. So the question is whether price will now sell off, will price react to this level once again and sell off to the downside and possibly breach those recent lows made around the kind of 5th of August and 6th of August, or in fact, are we ready to start, the kind of continued bullish rally that we always kind of end up seeing on US indices? So is it a matter of time, and or are we going to see a sell-off now take place? I'm going to quickly draw out the Fibonacci retracement tool just to kind of see if we're sitting at any of those key levels at the moment, or in fact are we ignoring some of those key levels. So arguably we're ignoring some of those key levels, but some would argue that we are sitting on that 38.20, but I would say that price reacted to that 38.20 around the 7th of August and the 6th of August, and is now actually breaching above that level and ignoring that level, but ultimately is reacting somewhat to that higher area of liquidity. So keep your eyes on the US 30. Next squat is the dollar, which, not too much to say for the dollar really. We are sitting at that 50% Fibonacci retracement level, or at least we're sitting under it. So that's the kind of key resistance level that's seemingly formed for the dollar for the moment. And as a result, what we're seemingly forming is this kind of area of resistance and liquidity, which price is holding and kind of failing to break above. So it will be interesting to see whether we sell off from this level once again and continue lower, or in fact are we going to see price try and break a bit higher, break out those kind of levels, and make a move to the upside. That's all to talk about on the dollar though. Next talk about is Euro USD, where like the dollar, not too much to note. Price action's kind of iffy at the moment for the dollar, I find, especially with this kind of weird volatility that's entered the market following the kind of bad news that we've heard from the US economy. And as a result, price is sitting back below this key area of liquidity after the price recently spiking to the upside and reacting to those higher levels. So at the moment, price is down and around these lower levels just below the kind of sitting at the 1.091 level, but ultimately when we utilize the Fibonacci extension tool, we can see that price has recently reacted to that 50% Fibonacci retracement level and is now sitting just above that. So it's a question of whether price will utilize that area to move to the upside, or in fact are we preparing a move, a continued move to the downside. Next talk about though is pound yen, which is sitting at a very interesting level in my opinion, as ultimately as we've seen over the past week or 2 weeks or 3 weeks now, we've seen price just absolutely collapse for pound yen as a result of some key yen intervention in the news, and as a result price has just fallen off a cliff essentially, with price bottoming out around the 180 key psychological level very recently, I think just on 5th of August. So price sold off massively to the downside but bottomed out around those levels. Now why am I talking about these key levels? Well, ultimately not only is that a key psychological level, but it's a key area of previous accumulation, key support, and ultimately was the kind of very key very extensive Fibonacci extension level of minus 127.2. Now obviously we don't usually use such such large Fibonacci extension levels, which are so far away from the traditional price action, but ultimately in this key move I wanted to map it out because we're seeing such extraordinary price action where ultimately price is just selling off and not stopping, and so it's important to then start to utilize these Fibonacci extension levels which are further away from price to better understand the levels that we're now going to interact with during these periods of greater volatility, as price initially sold off of course from those all-time high levels, but then retraced and reacted to that 2360 Fibonacci level before continuing onto this kind of knife drop, and that's where we're now sitting now, and now we're sitting at these kind of levels that price has retraced up to, up and around the 188 level, which is seemingly acting as a very key psychological level, which price has now reacted to twice, and at 3 key Fibonacci retracement level, well, two key Fibonacci retracement levels of 3820 and 6180 mapped out at different levels of the massive knife drop that we've seen recently, but also at the Fibonacci extension level of 6180. So that's the kind of situation that we're sitting at for pound yen. I think pound yen is really the key one to keep your eyes on at the moment, as the price action, whilst is very volatile, it is representing some very key, very interesting moves, because ultimately it's interacting with these very key liquidity zones, and is of course reacting to the news that's coming out at the moment for both the yen and the pound quite greatly. So definitely keep your eyes on both. On this pair especially. Next to talk about is Bitcoin, which is currently sitting below that $60,000 Bitcoin mark after having retraced to the upside recently following the very poor US growth news. So that's why we've seen this kind of retracement back to the upside after the significant sell-off, and now we're kind of selling off back again to the downside. If we draw out a Fibonacci retracement tool, we can note that price has kind of reacted to that 6180 and is now selling off from that level. So we will have to wait and see now whether price continues lower, or in fact will form a kind of range like we've seen before for Bitcoin. Next to talk about is gold, which is currently sitting within this range formed by the kind of crazy volatility that we've seen recently for gold. Once again, I think it's important to note that the kind of world tensions at the moment will be affecting gold, and so anything to do with the Middle East is something that you should definitely be keeping your eyes on if you're following gold at the moment. And we are receiving some very important US inflation data this week, as well of course the British inflation rate figure and some other key US data. So all of that will definitely impact gold this week. So gold's an important one to keep your eyes on. Last to talk about though is oil, which is currently sitting at the very key psychological level of $80 a barrel and near and around the 6180 Fibonacci retracement level. That's all to talk about on the charts. So last to talk about is the economic calendar, which I'm going to have to get through very quick because we spent too much time on the charts. First to talk about is of course the British employment figures, followed by the Eurozone and German economic sentiment figure, followed by that receiving the US producer price inflation figure, as well as the British inflation rate figure, as well as the Eurozone GDP growth rate figure, and then the US inflation rate figure, which is the most important figure of the week, it does seem like. Followed by that receiving the Japanese GDP growth rate figure, as well as the Aussie unemployment rate figure and the British GDP growth rate figure. Followed by that though, we're receiving the US retail sales figure and the US consumer sentiment figure. But that's all to talk about for the economic calendar this week. We've got lots in the articles, lots in the charts, and lots in the economic calendar though. Hope you have a great trading day and a great trading week. But that's all from us at Wildwood Capital. Have a great one. See you later. Bye.